the lockdowns hit. The politicians make us close the office. Everybody goes home. Google and Apple and Amazon and Microsoft start sniping all of our employees from home. It's pretty clear, right? If I want to destroy your company, I sentence all of your employees to home jail, right? To home imprisonment. And then I offer them 20% more to redirect their computer browser to some other company. So it's clear we're going to lose all of our human capital. The stock tanks to $9 a share, and the company's worth nothing.
This was MicroStrategy at the
2020.
time? Yeah.
Yeah, I'm telling you the story of you're asking me, how did I get convicted?
The audience, your software company.
It's March of 2020.
Okay.
We're a software company. Yeah. We're a $500 million software company. And the lockdowns come, and all of our employees get sent home, and we're losing them to Microsoft and Amazon. And so we're losing our human capital. We're a public company. The stock tanks, it's valued at half of revenue or something.
Wow.
Call it $3 a share. That's what the company's worth. And if we do, and then Jerome Powell says, well, the 500 million in capital, that's worth nothing forever.
Wow.
And our choice is either sell the company. It's like a fast death. Just sell the company, give up, write off 30 years of work. Or a slow death, cling on to $500 million of cash yielding zero, watch it get inflated 20% away a year, right? The inflation rate was 20% at that point. We're printing money like there is no tomorrow. Costs are, you can't see the inflation in 2020 because it's illegal to buy anything. Right? When there's a war and the government doubles the money supply, but it's illegal to buy anything, you don't see the inflation. You see the inflation after the war ends, when when you can go buy an airplane ticket or go to a concert or try to go to a hotel, and at that point everything doubles or triples in cost, except you don't have any money, right? Because the government doubled the money supply. So it was pretty clear to me that the currency was collapsing. And we were going to have all our human capital stripped away, and we were, having all of our financial capital stripped away. And, I think the stock traded $1 million a day. Like no one cared at all about the company. And we're either going to basically sell the company, give up for, $8 a share, $10 a share, whatever, or we're going to cling to life for 5 more years, at which point all of our employees will have quit. The product won't be any good anymore. We've just had all of our talent stripped away from us, and then the world will say, well, they went out of business because they deserved to go out of business because they couldn't compete with the big guys, Or we could do something. We could take a risk. So it's that point in the movie where the guy's sitting in the Citadel with an army, and he sees there's a war, and there's the War of the Roses, and there's there's the white faction, and there's the red faction, the Yorks and the Lancasters, and you're either going to sit there and get starved to death by both of them, or you're going to pick a side, and you're going to ride out and you're going to fight, and if you win, maybe you get to live, and if you lose, well, at least you went out fighting, right? And so that was where we were at in 2020, and we decided it's either a fast death or a slow death or fight. And I thought maybe I would prefer to fight.
So you thought at that time, buying $250 million worth of Bitcoin in one day, had you bought any up to this point at all?
No, I mean the way we got there.
Bitcoin?
No, nothing.
Nothing.
No, I mean,
crazy.
Look, it didn't happen in one day. What happened is I concluded by April that this was a way out. Bitcoin was growing 80% a year at the time. So if you can buy something appreciating 80% a year, that's a commodity on your balance sheet.
Faster than your company.
It's like, if you could buy a digital monopoly growing 80% a year at 1 times revenue, would you?
Yeah.
Of course you would.
Yeah.
If you could buy a digital monopoly growing 30% a year for the next 20 years at 1 times revenue, would you? Everybody would. It's not a complicated idea. I expect Bitcoin to grow 30% a year for the next 20 years. It's a monopoly. You're getting it, you buy $100,000 worth of Bitcoin, you're getting a $100,000 business growing 30% a year. This is a monopoly at 1 times revenue. Why wouldn't you? Everybody would. The breakthrough was just thinking of it as doing a acquisition of a digital monopoly on money, right? It's the dominant digital monetary network, right? So we have to do a transformational acquisition. And
to survive.
And since there's no other company growing 80% a year that's available at 1 times revenue that'll sell themselves to us, Bitcoin was the deal, right? Bitcoin
no
was
employees.
Yeah. So we looked at it and we thought we can buy the dominant digital monetary network at 1 times revenue. It's growing 80% a year. On paper, it looks just fine. It's just no one ever done it before. But the theory isn't that complicated. I mean, what did Facebook pay for WhatsApp or for Instagram?
WhatsApp, yeah.
WhatsApp. I mean, think of what did Google pay for YouTube?
Yeah.
Okay, so it's not a complicated idea. You buy the monopoly, something that 1 billion people need, nobody can stop, that's in hyper growth mode, that'll sell itself to you cheap. Why wouldn't you?
Yeah.
So that wasn't the problem. The problem was no public company had ever done this before.
Right.
And so first I have to convince the officers of the company. Then I have to convince the board of directors of the company, right? Now, and that takes a while. And then yeah, the logical thing is let's just go ahead. We're going to bet the company on this, buy 500 million worth. But, you know, between the lawyers and the risk managers, everybody thought, well, that's too risky. So let's do some. I said, well, what about 400? I'll do a buyback. 400 million of Bitcoin, I'll buy back 100 million of stock. No. 350 million of Bitcoin, I'll buy back 150 million of stock. No. 300 million of Bitcoin, I'll buy back 200 million of stock. No. Okay, here's my best and final offer. 250 million of Bitcoin, and I will buy back $250 million of the stock in the open market, the tender offer. Okay.
So explain that to me. So
when we announced the deal, what we said was we're going to buy 250 million of Bitcoin.
Yeah.
And we're launching a tender offer. The stock was $120 a share. We'll buy you out at $140 a share if you don't like the idea. So we basically said...
Who funded that?
The company. The company had $500 million.
Got it. Okay.
And the company said, we're going to buy back...
I'm a real estate guy. You got to remember, I'm a real estate guy, dude. It's like, to us, it's like, I got to see it, I got to touch it, I got to feel it. So you got to go slow with it.
I'm the CEO of a public company.
Okay.
And I want to do something very risky.
Got it.
But you're the outside shareholder, and you think I'm crazy.
Right.
So I say to you, I'm going to go bet the company on Bitcoin, but if you don't agree with me, I'll buy you out your shares.
Got it.
And so I'm going to offer you $140 a share.
$20 premium.
Yeah.
Yeah.
If you want to get off the ride.
How many people took you up on that?
So the way it worked is we announced the 250 million in Bitcoin, then we had a 20-day tender period. We made a tender offer. We offered to buy up to $250 million. The stock traded up, and then it traded above the $140 price, and everyone that didn't like it sold into the open market at north of 140.
Wow.
When the 20 days finished, we had $60 million worth of shares tendered. We paid off the $60 million of shareholders at 140. We had about $175 million of extra cash at that time. We turned around and bought Bitcoin with that. So the first deal was 250, and that second deal was after the tender offer. It was the extra 175 million, and then Bitcoin rallied, the stock rallied, ran through the roof, and the rest is history. I'd had experience as a private investor, and so I invested in all these big tech stocks, and I made a lot of money investing in Apple and Amazon, like 20x my money in all the big tech things. And I had a vivid recollection that I'd worked myself to death, like 3,000 hours a week for 10 years in my business, and I couldn't get ahead. We were basically banging our head against the wall against Microsoft. But 1 hour a month, I would invest in Google or Apple or something, and I was making a fortune, and it was easy. Mm-hmm. And I started thinking, if I had it to do again, I think I'd take the company money and invest in the big tech stocks, because then the shareholders would all get rich, because simply working harder to compete with Microsoft is not a way to get ahead, right? They're just too powerful. You cannot compete against the monopoly of the world. So I had that experience. I had some experience trading swaps and currencies and other things. So I had an intellectual interest in these things. But really, necessity is the mother of invention, Grant. It's like when someone tells you, I got some bad news. It looks like you're going to die of something. You've got 12 weeks to live. You all of a sudden get religion and you start, you go online and start interrogating the AIs. You start arguing with the AI about whether this is right or wrong. And someone says, maybe you might want to change your diet. And the thing you dismissed for 50 years, you think, maybe I might want to change my diet.
Right.
So I think you get open-minded when you have this near-death experience. And what they say in the history of science, and one of my degrees at MIT was the history of science, they say the only time you ever see a paradigm shift is either when the old guard dies, like people that think they know how the world works just have to die, have to get out of the way. Max Planck said science advances one funeral at a time, right? And then the other time when there's a paradigm shift, when people embrace a new idea radically, is during a war. Right? War on COVID, World War II, someone's dropping a bomb on your head and you're an aircraft denier. You don't believe in air power, right? You don't believe in nuclear power and they drop an atomic bomb on you. Okay, so a lot of things that people rejected. We literally court-martialed Billy Mitchell, right? Like the military court-martialed the guy that said, the Air Force is important and airplanes are important. Yeah. The Army court-martialed him. Right? I mean, Pearl Harbor.
COVID was a war.
What?
You think COVID was a war? Or equivalent to a war?
It's absolutely a war.
Yeah.
There are 2 wars going on.
Yeah.
Right? Maybe 3, right? There's a war in COVID, technically, right? That biological war. There's a cultural war. Right? There's a cultural war. The war when we shut down every small, mid-sized business and bankrupted gym owners and restaurateurs and bar owners and everyone that work with their hands in the blue-collar labor
100%.
While we enriched Wall Street and hedge fund managers, right? Everybody on Wall Street had the best year of their life, and everyone that actually was a blue-collar laborer, not only were they bankrupted, they were thrown in jail for showing up to work. Right? Had their reputations destroyed, their accounts frozen, etc. There was definitely a cultural war there. You still can't talk about it, right? Right? It's still very difficult to talk about. And then you had a currency war, a war on the currency, right? When you basically determine that the interest rate is going to 0, you're inflating the currency through the roof. You're devaluing someone's assets, right? I am devaluing your currency. And of course, all of the derivatives of the currency. So there was a currency war as well, and if you didn't notice it, right, you must have been in a coma for the year. I think everybody noticed it, and the issue is, how did people react to it, right? And everybody's got their own story of how they reacted to it, but I think it was pretty transformational to a lot of people in the world. There's 400 million companies in the world. There's 40 million companies in the US. There's 4,000 big publicly traded companies. There's maybe 400 Wixies. There's maybe 200 to 400 well-known seasoned issuers.
Wow.
So in the entire...
You want to be one of those?
Yeah.
Okay.
Yeah. The punchline to this story is...
I'm learning, Michael.
If you can sell $1 billion of security to the public without waiting for permission from the regulators, that's a massive competitive advantage.
Right.
Okay.
So you announce on Monday, Tuesday you're collecting money.
Yeah. And of course... This is a capability we had in 2019 or 2020, but of course we never had a reason to sell securities. Most well-run public companies aren't in the business of selling or issuing securities. They're in the business of buying them back. So the big inversion, right? The paradigm shift, the thing that allowed us to really, you said, when did you become, the leader of the movement or create a new industry.
Yeah.
Right? It's when we realized that if you're a well-known seasoned issuer, you can sell $1 billion a week of securities. If you're not a well-known seasoned issuer, if you're a public company, but one of the smaller ones, you file the registration statement and you wait for 3 to 6 months to get permission.
The whole market.
And by the time 6 months have gone by, it's too late.
Right.
Okay, maybe you'd wait a year.
Right.
If you're not a public company, it's illegal to sell the securities. Then, you might spend 3 years. It takes 3 years to take a private company. Yeah, you know a little bit about this.
Yeah.
It's not easy to go from being a private company to being a public company.
It's almost impossible.
They make it hard, don't they?
Why? Why do they make it so hard? And then we'll get back into this. But
It probably goes back 100 years,
I don't
right?
think it's for the good of the investor, though.
Yeah, go back to 1930s with the SEC Act of 1933. It was a reaction to the 1929 stock market crash, and it was a bunch of guys in Washington, D.C. making a power grab to centralize control of the securities industry in Washington, D.C. and move it away from New York City. Mm-hmm. Depending on who you believe, there are a lot of historians that say this was a triumph of the Rockefeller interest over the J.P. Morgan interest. And they wanted to prevent J.P. Morgan from creating so many companies and exercising so much control. So in the SEC 40 Act, or the SEC 33 Act, they basically said, you have to get permission from an agency in Washington, D.C. before you sell securities to the public.